Operation GIC Re, and Alice Vaidyan, who's CMD of the business, joins in for a quick review of the numbers. Great to have you on the show. Thanks very much for joining us this morning. What has led to the strong performance in Q1 and lowering of the underlying loss essentially?
Yeah, I think we are very pleased with the performance of the first quarter of this financial year. We have grown by 9.3% for the premium growth. The claims have come down. We have had a 97.7, almost double. The PAT has grown, and combined ratios are also within 100. So we are very pleased with our performance for the first quarter. Mainly, I think I would attribute it to the underwriting discipline of the market itself. The market is on the mend and we can see a lot of price corrections happening. But otherwise, I think I should say that GIC Re, with its as a dominant reinsurer with almost nearly 70% market share, with the pricing power that we have in the market, we have been able to make corrections, pricing corrections. So that has also contributed to the good underwriting performance. Adding to it would be the claims management, good claims management, and the restructuring of the reinsurance treaties which we have done for the April renewals for this year.
Alice, which segments in markets contributed to high premium growth, and what is the outlook on the same?
Yeah, see, we have agriculture is one of the, crop insurance is one of the biggest segments. Apart from that, we had the fire section, property section contributing, health section contributing, motor as well. So motor and health have anyway been the biggest drivers of growth in the Indian market.
The combined ratio at 99.9% versus 99.7%. What has led to this largely stable combined ratio, and what is the outlook going forward?
Yeah, see, the focus of the company has always been to bring down the combined ratio of the company. So ideally it should be within 100%, and that has been the focus. So I think going forward also, in a short to medium term, we are looking at a combined ratio of something between 95 to 100%, and in the long term we are looking for something between 90 to 95%.
Mixed insurance incurred claims, and the ratio is at 88.3. What are the key drivers and outlook ahead?
For the claims ratios, see, that will also to a large extent depend on whether there have been any catastrophic loss events either in the Indian market or also in the international market, given that we write business from 160 countries across the world. But this quarter has been good in the sense that we haven't seen any big losses. Of course, we've had some losses from our Dubai region, Middle East region, so which have contributed to a slight increase in the incurred loss ratio.
Okay, so what's the strategy ahead on expansion now, and what is the growth that you do foresee going forward? How will the mix between domestic and international shape from the current levels?
Yeah, see, ideally we would like to have a portfolio mix of domestic and international in the ratio of 60 to 40. But given the growth in the Indian market, it is now slightly at 70-30 and all that. So going forward, we would like to grow our international book as well, and have some sort of a balance between our domestic book and the international book at ratios at 60-40.
Okay, so General Insurance Corp had gotten in principle approval to create a new syndicate from Lloyd's Franchise Board as well. Update us on the same, and how is it that it will help diversify your group's international portfolio?
Yeah, so the Lloyd's syndicate, the GIC Re Lloyd's syndicate, it's called GIC Re 1947, that has become operational from the 1st of April. And going forward, we look to write good quality foreign business, and I think that will help us to expand our foreign book in a big way. So we will start at a small level now. We'll slowly scale it up, but we'll have access to all the platforms where Lloyd's is working, and that will definitely add to our foreign business expansion plans.
But in the recent IRDA draft norms this year, reinsurance buyers would give a priority to GIC Re and multinationals that have branches in India. Has this been formalized? How positive will this be for the growth of the business?
Yeah, the right of first refusal or the order of preference will continue now in the market. So that will give a boost to our business as well. It will only mean that this is an extension or an enforcement of the regulator's decision to maximize the Indian market capacity, which is in the best interest of the Indian market and of the country as well.
The ratio stands at 1.7%. What is while solvency ratio is healthy, what would your capital needs be next 1 or 2 years, and will this solvency ratio improve further?
Yeah, see, the mandated solvency ratio is around 1.5 only. So this would actually mean even at 1.7 or somewhere around 2 would mean that we are effectively utilizing our capital. So we want to have a right balance between having the right solvency margin as well as the right utilization of capital. But given that the agriculture growth has stabilized in the market, we think going forward we will be able to maintain it at around these levels. Yeah.
Thanks very much, ma'am, for joining us and giving us those details. And